Good afternoon. I'm so excited to be here. Thank you to MEREDA for inviting me back again. I'm not sure where my slides are, but I'll just keep talking. So how did things look in the residential market last year? For me and a lot of my fellow realtors, the spring was a little bit of a blur. One agent in my office, a buyer's agent, coined it a full contact sport. The inventory was just so tight, and the buyer demand was so strong, we didn't have enough inventory. Last year when I was here, I talked about escalation clauses and cash being king, and that held true again this year. But we saw the tender side of buyers. The old-fashioned art of the first personal letter made a comeback. We actually had a buyer's cat, write a letter to the current homeowner's cat. And we saw gifts. The buyers were leaving gifts for the sellers in hopes to differentiate themselves. We had buyers walk through a listing and notice that the homeowners were music lovers. So they left them a ukulele, and they wrote a heartfelt letter about why their family deserved this home and cut it out in the shape of the ukulele and attached it to it. Sadly, they didn't get the house. But that was sort of the climate that we were in. So today we'll take a look at some of those sales and how that tight market really benefited the sellers and pushed the prices up. We'll go over the data and the numbers, and then we're going to take it just a step outside of Maine for just a minute and look at the future of residential real estate. And of course, I'll close with the 2019 forecast. So this little guy, 1,300 square foot bungalow, 3-bedroom, 1 bath. You can see from the map, listed in South Portland, not on the water. It had 18 offers. I interviewed the listing agent, and he said the open house was so crazy, 150 buyers walked through. Stone Drive's a dead end. They blocked the street, ended up staying there a couple hours over the allotted time for the open house. 18 offers, that's a lot of offers to go through. Looking at Portland, the Rosemont neighborhood, such a great neighborhood, walkable, very desirable. And this, again, a 3-bedroom, 1-bath home. The comps indicated that $320 was a great price, kind of like in Britt's beer example. You know, we were right there at the top. 8 offers. This house, it needed a little bit of work. Someone over the years had added drop ceilings, and the wiring was still knob and tube. So they were paid $50,000 over and still put money into it. And then heading north to Yarmouth. Everybody loves Yarmouth Village, quintessential Maine town, walk to everything. This house listed pre-market, coming soon sign went up, and with multiple bids, $100,000 over the list price. And historically, antiques, they take a little bit longer to sell, but this one was snapped up. So truly a seller's market last year. So now let's take a look at how we got there. We'll look at the science behind it. So last year when I was here, I was really excited. The median price for a single-family home in Maine hit $200,000. And in the forecast part, I mentioned, I think we'll be steady Eddie. We're going to see similar results. Well, we beat that. Prices rose 7.5% for a single-family home in Maine, and we topped out the median price at $215,000. Interestingly, our transactions, we really haven't moved. They've been flat for 3 years. I didn't do a graph for volume because prices are up 7.5%, and the volume is up 7.5%. But had there been more inventory, we would have had more transactions. There was 18 offers on Stone Drive, so 17 other people. Did they find houses last year, or are they still out there in the market for this next spring? So a really good sign for next year. So looking at the trend, 5 years ago, median price in Maine for a single-family home, $175,000. That's almost a 23% increase. We're just steady Eddie, trending right up, sort of like the rest of the economy. And in Cumberland County, not only Do we beat the market in price for the state? We're also increasing at a higher rate. We talked last year about in the previous boom and prices were rising, in double-digit rates. But here we're still at this steadier rate, 6 to 7%. So we're seeing the trend last a lot longer. So we topped out in Cumberland County, the median price at $307,000. That's not cheap. To dig just a little deeper. All right, I really like this chart. It says a lot of things. This is month over month, the median price over the last 3 years. So in Q1, we see that seasonal dip. So February, it's the best time for buyers to buy a house. You're gonna get the lowest prices. Sellers, that is the worst time. We see it year over year. So in June, we saw that the tippy top of the market, and that gap between the year before, that's about a $20,000 gap. So if someone would have waited 1 year, they would have saw a very strong return. So the houses that closed in June, they probably went under contract in April, and that was the frenzy that I talked about. That was when the inventory was so short and pushed those prices right up. So next year, I think, we'll see smaller gaps, maybe even some overlapping. So what was everybody having these bidding wars over? What were they looking for? In 2017, the most popular home was the Colonial. And in my predictions, I mentioned the comeback of the ranch. So I was really excited to see that this actually came true. So spec builders in the room, this is what people are looking for. 1 floor living, 3-bedroom homes. 3-bedroom homes sell at a rate of 3 times a 2-bedroom or a 4-bedroom. And small lots are okay, 1/4 of an acre or under. Modest size homes, 1,500 to 2,000 square feet. And people always love character in homes, turn of the century to 1949 or newer homes. So next, let's look at the sale price ratio. So obviously, due to the low inventory and the multiple bids, as Britt showed, those prices went over asking. So in the same way, we saw the prices rise in the spring and summer. These homes closing, if you look May through August, on the median, prices sold higher than their list price. It's a little crazy. And those were going under agreement probably late March to early July. Again, that was the frenzy, that was the tightening. So days on market, how long does it take to sell a home in Maine? On average, it was 28 days. 5 years ago, it was 2.5 months. And similarly, in Cumberland County, we saw the same trend, but the results much better, only 12 days. So if someone listed their house and 12 days later they had a contract, that means they had to move out in probably 30 or 45 days. So if they didn't know where they were going, what they were going to buy, they were now in that position to bid over asking and be in that multiple offer situation. So definitely, undeniably, a seller's market. So next, this is the active depending ratio for single-family homes. So as Britt said, it was pretty healthy. This is about a 55% ratio. So when I pulled this data, I was really confused. I'm like, if there's available houses, why are we having all these multiple offers? Why are cats writing letters? So I narrowed the data down, and I just pulled out just 3-bedroom homes, the most popular home. And when I did this, you can see the pain point. The orange being available homes is higher than the teal being active homes. Sometimes in this market, as realtors, we would look in MLS in a certain segment and there'd be like 1 house available or 2 or sometimes 0. To put it in perspective, I pulled the exact same data 5 years ago. So here we're looking at a buyer's market, tons of inventory compared to the amount under contract. So let's break it down a little bit further into segments. So under 400,000 houses sold at full ask, 11 days on the market, and prices up 6.5%. But when we look at that middle segment, 400,000 to $1 million, they still sold, quickly, a couple weeks, 99% of their list price, but the prices, they're flat. We are only up a smidge, 0.25%. Surprisingly, the luxury market, listings $1 million or above, little room for negotiating. They sold at 95% of the list price. Took a little bit longer, 32 days. Price is up 10%. So it's pretty significant. If you look over the last 5 years, this has been a sluggish market, pretty flat. Last year, our volume up 25% and transactions 18% in homes priced $1 million or more in the state. It's kind of exciting. So breaking it down by some of our popular towns, Westbrook, so attractive to buyers. We see our most dramatic results in Westbrook. 5 years ago, median price was $191,000. Last year, $255,000. 5 years ago, it took 49 days to sell a single-family home in Westbrook. Last year, just 7. And of course, Portland and South Portland, very, very popular. Portland condo prices up 12%, and a single-family home in Portland up 10%. Going into the suburbs, really saw sky-high prices in the suburbs as well. Being a little more expensive, they took a little bit longer to sell, but really phenomenal results. Cape Elizabeth and Falmouth prices up 12%. So that wraps up the market data. Clearly, that tight inventory drove the prices up. Homes didn't stay on the market very long at all. So taking a step outside of Maine for just a second, what's next for real estate nationally over the next decade? You want to know, right? So every year, $100 billion of commissions are generated in the US, of real estate commissions. And real estate's been sold pretty much the same way for decades. Millennials next year are going to account for 45% of all buyers. So millennials, and frankly all consumers, they want information and action on demand. They don't want to call up and leave a voicemail and wait for someone to call them back. They don't want to send an email and wait for a response. They want to take their phone out and press a button and have an action happen. So an enormous amount of money is being invested into technology that's going to take a bite into the real estate industry and that $100 billion of commissions. This historical void of innovation in real estate has opened up a world of opportunity for tech startups. The term is prop tech, which refers to this sector of startups that are created solely for products for the real estate market. This sector is the future of the real estate market. So one example of this, what the heck am I talking about? One example is an iBuyer. So basically, a seller can go online and trade in their house. They put in the specs for their house, and they get an offer online within minutes. An automated valuation tool makes them an offer. If they accept, they can close in a few days or pick a convenient close date. So no showings, no repairs, no open houses, nothing like that. So yeah, these valuations are coming in less than market, but once the market corrects, this is going to be an opportunity for people that lost their job and they have to relocate to another state, or they're going through a sensitive divorce. This company, Open Door, they're open right now in 18 markets, and they're looking to open in 2 markets per month next year. And then for buyers, if you purchase an Open Door home, no need for a buyer's agent. Open Door qualifies you, and then they just text you a code to get into the house. You can go anytime from 6 a.m. to 9 p.m., your own private open house. So these prop tech companies are investing a lot of money, but it's not just the tech companies. It's Keller Williams, Realogy, which is the parent company for Sotheby's, Coldwell Banker, Better Homes and Gardens, Redfin, Zillow, by far the biggest online platform for real estate. They all have their own iBuying arm and are investing heavily in real estate. The players in this space are really powerful. Globally, the venture capital investment was $12.6 billion in 2017, and I'm sure much higher just into these prop tech companies. Opendoor, the company I just mentioned, they've raised $1 billion in VC money. So the technology that changes the industry, it may not be trading in your house online or automated showings or virtual reality showings. But once all this VC money being invested, once they find that technology, the change is going to be rapid fast. Once that magic bullet is discovered, things will change quickly. Sort of like Uber, you know how quickly that caught on. So it'll be really exciting to watch and be part of these changes as technology is infused into residential real estate and slowly creeps into Maine. Expect more tech-driven disruptions from the prop tech firms in 2019. Okay, the forecast. So it's good news. I think I'm a little more optimistic than maybe some of the speakers we heard. In 2017, the prices, they were sky high in Maine. Mortgage rates were low, and the sellers had a strong upper hand. We saw in the month-by-month chart those prices softening a little bit towards the end of the year. I think that's partly seasonal. This spring, expect another big push. I don't see prices declining in 2019, maybe not a little leveling off. Two things for sure we'll see in 2019. Surging millennial demand. Again, 45% of all buyers will be millennials. And interest rates are going to continue to creep. I don't think they're going to shoot up as much as we thought before. They recently have went down, but they still will be creeping by the end of the year. The number of homes for sale will increase. We'll get more inventory, but that inventory is going to be in that mid and upper tier. Entry-level homes, they're going to be snapped up. So tough for first-time home buyers looking for that entry-level home. But overall, with a little less demand in the market, we'll have fewer bidding wars and multiple offers, at least for another year or two. Inventory is going to open up. We'll enter into an opportunity market. In 2019, we'll be able to match our buyers and sellers a little more easily. I think we'll see negotiating happen again. So a better opportunity for buyers, but still really great for sellers. Sellers who price their homes competitively, they're still going to walk away with a nice profit. So I predict the market to be more open-minded in 2019, room for negotiating, and an opportunity for buyers perhaps to have time for a second showing. Thank you so much.